Hey everybody, this is Jim at SP500chart.com coming to you on July 24th, 2012, a few minutes before 7 here on the East Coast. Before we get started, I just need to remind you, as always, the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research. And you need to make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy that draws lines on charts. Okay, we're starting out here with a 30-minute chart so we can kind of see what we've been dealing with for the past couple of months. And I'll say that the S&P has been taking down these little areas of support where you would expect support. They've been taken, well, one got taken out yesterday, another one got taken out today, albeit a short term support line. This one right here, this gray line that was light orange. Since it didn't hold, I guess I'll leave it there. But hold on, let me make it back to that orange color again. We'll go back to light orange. But guys, here's what this is kind of hard to get a handle on, because we're not seeing super hard breaks of expected areas of resistance. We're getting one little break after another. So you can see that the action that the S&P has been in ever since the breakdown of our head and shoulders top has been fairly clear. We start an upward channel, then a downward channel, an upward channel, a downward channel, an upward channel, and now another downward channel that I'm not sure where it's defined quite yet, because we don't have enough lows to know for sure. So that's one of the things that's making this a little tough. So now, once again, we bounce on a line that seems to have some technical significance. It's one of the lines that's been on my chart for a long time, this green line right here, which has its genesis, if you will, from the right shoulder of our head and shoulders top, and this peak back here on, after the breakout from, well, I guess I would have to say from the, is it a breakout? Yeah, it was a breakout. We've just never really reached our target from this inverted head and shoulders down here, and clearly that gives me some reason for concern. So anyway, here's our if we go back to a 2-hour chart, here's our head and shoulders top. Here's our breakdown. Here's our head and shoulders bottom, but all of this is looking more and more like an almost back test to this purple extended neckline that I thought we'd make it. I thought 1390 was going to happen, and I'll be honest with you right now, I'm not holding my breath on 1390. I'm 70% cash, taking little hits on the 30% that I have invested. Some of these are kind of story stocks that aren't necessarily working in absolute tandem with the markets at large. But you can see, if we go to this hourly chart here, we've got the breakdown. And now this looks to be something like a large bear flag. So what do we do with this then? Well, a lot of people say that flags fly at half mast. Okay, but the last flag we had was back here when we came down a good bit. Then we made this little flag, and we came down just almost exactly the height of this flag was the depth of this move. So if we use this line right here as our defining support line, and we use this as our defining resistance line. And let's just kind of go for an average right here. Then if this bear flag behaves the same way, then we are probably, if we don't bounce right here and form some other kind of pattern, then it looks to me like the markets are wanting to come back down and retest these lows from early June. Get down into the 1280, 1270 area. That's just based upon this pattern. But I'll remind you again, this pattern, it's not a beautifully formed thing. But for right now, it sure looks like this is starting to round over. Possibly, I would have liked to have seen a little bit tighter flag and then a clear break, but instead it looks like we're getting broken down by degrees right here. So at least for right now, I'm going to call this 1380 as the best thing we're going to get out of that inverted head and shoulders pattern. And if you look at it one more way, there is also kind of there is a way to say that this pattern met its minimum target. Typically, you look at where the breakout occurs, and then you look for where the high is, where it should be from the point of breakout. But this has kind of a sloping neckline. If it's interesting, I just noticed this today, that if we move this down the neckline right here to where it lines up with the neckline in late, just last week, you can see that is also where we reached that top. So, I think that's kind of an excuse, to be honest with you, to say, well, the pattern met its target. I don't think it did, but there you can see what I'm talking about. Here's our neckline. Here's the low right here, and then we move that back to the neckline. There's our high. That may be something for us to keep in mind going forward. And I've seen this a couple of other times, but typically you'll see this with a head and shoulders pattern that has a lot more slope, either up or down, to that neckline. So for right now, my task is over the next few days is to try to figure out where we are forming a downward channel. That way we'll know a bit better where we break that channel and would start a move back up. Guys, it's possible at this point, but I'm not really holding out a whole bunch of hope that this 1325, 1326 line might hold. And if it does, then we would be essentially coming back for the second time down to gap support. That would be fine with me. But if this doesn't hold, then I think we have another reason to say that 1280 is in play, because this latter part of this pattern right here, this peak and this peak, may end up acting as a double top. And if that's the case, and we snap down to this double top line right here, which I'm trying to highlight right here, this would be the effective, quote, neckline of this double top. If we break through 1325, then it sure looks like this market wants to go down to 1280. So for right now, that's, I'm a little bit wait and see here, but I think this is probably the second shot thrown across the bow, what we saw today. And as we discussed yesterday, it was really difficult coming into the day knowing whether or not this was going to be a legitimate bounce to take us up into the 1380s again, or whether this would end up being a bear flag. And we discussed that yesterday. I hope you were nimble enough upon the break of this line, if you were a short-term trader, to recognize that that this is serving this pattern is a bear flag, and because of that, we got that breakdown, and then a pretty decently down day. At one point, I think we were down about 20 points. So anyway, guys, that is the video for today. Thanks for taking time out to watch it. I'm going to be on the road tomorrow, but I will be able to do a video. It'll be coming to you from upstate New York. So it'll be all scratchy voiced and crummy sound and a smaller picture, but hopefully the markets will tip their hat a little bit more tomorrow to where we can start to see with a little bit more clarity what's going on here. But look, right now it looks bearish. So look, take care. Thanks for watching.